Hello, and good afternoon. I welcome you to today's special webinar. I'm sorry, I just muted my mic. This is something which is not so positive here. So, but let me just repeat what I've already told uh, told the mic in this case. So I welcome you to today's special webinar, how to trade the market opening of the US markets. My name is Jens Klatt, and I'm exclusively presenting this format to you for JFD brokers. So unfortunately, we didn't see so much changes from last week, respectively the weeks before. So volatility is still enormously low. In this case, meaning that we've seen 16 trading days so far in 2017 that the VIX, the volatility index on the S&P 500, closed below 10. While then on top of that, yesterday, that was the 8th day or the 8th time in this month, not the 8th day in this year, but the 8th time this month that the S&P closed 0.1% up or down or less than that. So the last time that this happened is nearly 5 years ago. That was in August 2012. And if we combine those two informations, what we know is that obviously volatility is still very, very low, and that trading opportunities which could probably arise from the current market environment will be, will be difficult to find. So, I mean, if we look at, and therefore let's switch over to the chart, to the currency markets here. Let's look at dollar yen, for example. That was very volatile today. So if you look at the 50-minute time frame, you can see that the market in the morning, yesterday already, but in the morning also here during the Asian markets, pushed above 112 here. Then dropped quite significantly. That had also to do with the fact that the European markets were quite weak. So not sure if you had a look at the DAX, for example, which dropped below 12,700 points here in the morning. That's, by the way, something I had on my agenda. So if you followed my comments here on Twitter, then you may have seen in the morning that I was already bearish before the Xetra market, the spot market here opened at 7 a.m. GMT, and that in fact we dropped here from the start of the, or from 7 a.m. GMT on. And then I said, well, what I'd like to see is a pullback here towards the close from yesterday. So 8 p.m. GMT, that was around 12,770 points. The market, in fact, reversed some of its losses here from the first minutes of trading, but unfortunately didn't make it up to this level here, but dropped here below the lows, dropped below the so far, made new weekly lows. Yeah, that's true. But also here, dropped below the lows from Friday, which triggered some further downside action. And in the lows, tested the region, and this is something you can see here in the hourly chart, tested the region around 12,620, 640 points, which is now obviously becoming a really significant region. So you can see here, the moment we drop below this, there should be further dynamic moves be expected, which will easily push us then as low as 12,500, 530 points. And this is a crucial level if you look at the daily chart here. So if we break below this, there's room for further 400 points on the downside. So this is one of the reasons why in the morning, for example, dollar Japanese yen here dropped and pushed back below 112. And right now we see a move back. And this is really surprising since the US dollar all in all seems to be really weak. Euro really strong today. That has something to do with the comments from Mario Draghi in the morning, who mentioned during a conference here in not Lisboa, but Portugal. It isn't Lisboa, but wherever, doesn't matter. He said that deflationary forces are replaced by reflationary ones, and this is right now resulting in some huge pushes here in the euro on the upside. And so far, the market doesn't seem to stop here, but right now is obviously attacking the region of 100 at 113, which is probably right now start to get really extended here. And if we don't get a trading setup here for the US markets, well, we'll probably formulate one for the euro, which will be an anti-cyclical one. But this is something we'll have a look at a little later on. Second potential setup could arise here from the price action in the dollar Japanese yen. So there we have to close the cycle now. First, we've seen the bearish action here, the push below 112 again, after we made it above 112 during Asian markets, market hours. Then the European markets come in, they are weak. Now the market pushes back, doesn't look back, it's like looking like a V if you want. And so the question is, where does this current strength come from? Especially if you look at the fact that the US dollar seems to be weak, not just against the euro, but it's also weak here against the GBP here. This is a 4-hour chart today. So it's also very weak against Canadian dollar, for example. As you can see here, we can switch over to the Australian dollar. It's not as strong as it was in the morning, but still, the Aussie is green against the US dollar. So all in all, US dollar is very weak, except the Japanese yen. And this is something which is really interesting, since it somehow shows, and this is also something you can see here in gold now. Okay, well, you can't really see it in gold. So there's there are some question marks, let's say. But what we could say is that Janet Yellen, who will speak here in the evening, I'm not sure. Probably it's somewhere between 4:35, 5:30 p.m. GMT. And she'll talk to an audience here in London. And probably markets are betting that she'll come out more hawkish here, which could then, by the way, result in a huge reversal in the US dollar on a broad scale here, and probably push US dollar yen here significantly above 112, while in this case meaning here that we could see a huge reversal in the euro too, which could give back most of its gains here we've seen from the morning onwards when Draghi came out with those comments. And so as you can see, there's plenty of volatility in the currency market. So probably it's 1 second here. So probably definitely worth a look here to look at the currency markets, or more have a look at those currency markets as on the equity markets here. Since as I already said, things are really, really difficult here. So especially in terms of volatility, let's have a look here at Bloomberg. And that's, for example, something could trigger some action. I'm not sure. I think it's mostly priced in. So Google gets a record 2.7 billion EU fine for skewing searches. Why could this get interesting today? Since if Google comes under pressure based on the big market cap they have, this could probably then also have some negative impacts on big companies like Apple too, for example, and could probably push equities down here and resulting in some pressure. Not sure about this. So all in all, we can say that we're still very low in terms of volatility here and shouldn't expect too much. But even though we're still extended on the upside, that's the other side of the coin, meaning in case of the Dow Jones, for example, there's still a chance that rather sooner or later, probably we're pushing down to 21,100 points here, respectively in the S&P 500, that we push probably here as low as 2,400 points. I'm sorry, this is the weekly chart. So here to this level. So what I did already here is I prepared the chart for today, so that we can formulate a trading setup once the market opens here. But all in all, the price action itself is not that exciting. It's not that I say, well, we have to trade equities today. So I think currency markets are probably more volatile, and there's more action to be expected in those markets. And that's probably one of the reasons why I'd like to focus now on the currency markets first, especially in the Euro USD. So what I've already prepared here is a 4-hour chart. You can see I have no lines in my chart. All I have here is the RSI. It's a 4-hour chart, and that's it. That's it. And this is probably something we could then start to use to some extent here to formulate a setup, since what we see is the market is trading in a range. This is very obvious, and we're trading very close to the yearly highs. So, meaning many market participants probably have those have this level here on their agenda around 113. So it's also on top of that, it's a round number. So I'm sorry, this is by the way the wrong. Let's do it that one here, and let's do here a red line. So resist on the upside. So if you combine all this, you can say, well, it's obvious that there's a good chance that the market probably squeezes above 113, but it's probably not making it significantly higher than that. And the reason why I'm skeptical here, there comes this indicator into play. This is showing me the average daily trading range. And what you can see here is that the previous 5 days of trading, we had a range of 39 pips. The last 10 days, we had a range of 48. And the last 20-day, we had an average trading range of 48 pips. So we started the trading day here. That was at 111.80 around, and now the market is 100 pips higher than that. So this is 2 times the daily average range of the last 10 respectively 20 trading days. So or we can put it in a different way, the market is hugely extended on the upside. The market so if you look at the price action today, that does not necessarily mean that we can make it above 113. So, and this is one of the reasons why I don't want to go short here, since I just do not know whether we will, respectively, if we do, how much potential we have on the upside. So it's a significant level. It's a round number. It's the yearly highs. So it's the highest levels here for, I don't know, last time we traded in this region was in November around the Trump election. So what we know is that it definitely has a high level of significance here, but we just do not know how big a squeeze would be once we push above 113. Nevertheless, if the market then sees such a spike here, be really careful, since this could lead to huge reversal here, not just in terms of, and this is something you have to remember, not just in terms of the price action itself here, and that the market is extended from this point of view. So seeing 2 times the average trading range of the last 10 respectively trading days, 20 days, but it's also Janet Yellen. If she comes out more hawkish than expected right now, if you look, then obviously market is selling off. US dollar is selling out. So the question is, what does the market expect? Obviously, Janet Yellen, who does not come out as hawkish as probably expected. So most of it is priced in, even if she doesn't come out very, very hawkish. Probably sounds to some extent a little dovish. That's probably a good reason then to believe that the market will reverse much of those losses we've seen here in the US dollar, since most of this should be priced in. And on top of that, the market can be caught on the wrong foot if she comes out hawkish. The thing is, and this is something I'd like to you to have a look at what dollar yen does. So usually this is a contraindication to everything what's happening here. So if the market really expects her to come out dovish, dollar yen shouldn't push that higher, shouldn't be such aggressive bid here. What we can do now is not looking at the VIX, but let's have a look here at the yields and what they are doing today. So you just need to type in 10 and that should be enough. Yes. So here, let's look at the number. Yields is higher. Look at this. So yields is higher from 2.1125. So it's significantly up, obviously, on a day today biases, and here we see that it's yield driven. What we see in dollar yen, it's not just yen weakness, but it's also yields spiking up. So if you look at this and you put this in perspective, we see that the market is obviously not really believing that she comes out really dovish, even though US dollar is weak. So this could lead to a bigger sell-off then in the evening here in this case, Euro USD, for example. There's also something really interesting to note. Let's have a look here at the commitment of traders report. I've already presented this in the morning meeting, which is usually taking place at 9:30 a.m. GMT every day in the YouTube channel from JFD Brokers. So what we have here is the euro future, and if we click here on commitment of traders report, well, what you get is the commitment of traders report, and in case of the green line, the position of the non-commercials. So what we see here is that they reduce their long exposure, net long exposure, by nearly 30,000 contracts, and this is close to $4 billion over 1 week. So they cut their long exposure, and it's very interesting to see that they did this in this tight range. So obviously, the big speculators, non-commercials, are starting to sell their euro exposure. All in all, what Draghi said in the morning here in terms of deflationary forces are replaced by reflationary ones, I have to say, well, this is nothing really big or nothing really new, since we've heard something similar here from ECB, respectively Mario Draghi, on the 8th of June before. So it is no real game changer. So what is imaginable here is that the market is now taking off, lifting the offers here, and now the market pushing higher, where some market participants, I mean, just imagine that such a candle means there are some strong buyers. And now, well, where do they buy from? Well, they buy from people who are already long. So for example, people who are here in the commitment of traders report aggressively long. So they're probably selling against those highs here, their long exposure, since they don't buy it, or they see from a fundamental perspective, no real reason to be aggressively long euro anymore. After all the comments on the ECB, or the ECB made, Mario Draghi made on the 8th of June at their last meeting, where they said, okay, there's probably a time when we start to scale back and with our asset purchases. Nevertheless, it's still the case that we have to, or that we will see an extended period of time of low rates here. And if you combine those this with the current market action, I have to say that I just don't buy this spike. It looks really great. It looks awesome. It looks really strong, but I have the feeling that we're probably getting to see a short squeeze above this level, but then probably market will reverse sharply and probably give back most of these gains here, resulting in probably some really interesting aggressive anti-cyclical short scenario. Plus, on top of that, remember that the market here is really extended on the upside. So there is huge potential that rather sooner or later market will push back. And now, well, we can put another indicator here. We could bring it in play, the RSI on a 4-hourly chart, heavily overbought. No big surprise. I mean, look at this and look at the volatile action we've seen here the days before. But all in all, this is really huge extended. Doesn't necessarily mean that the market will reverse. So just remember, last time then the market did this. That happened several times in the past. It doesn't necessarily mean that the market really moves down here. And this is the thing, the conditions, especially from a sentiment perspective, have changed, in my personal opinion. And this means that now chances are increasing that probably the euro is about to see a short squeeze here above those highs and then turning lower, especially if Yellen comes out hawkish today in a few hours here. Meaning that this could lead to some big moves and could get us some interesting trading setups. Now the problem is, how do you really define such a trading setup? What would you do? This is exactly the problem. So I still see the euro hugely extended on the upside, but you just don't sell into this current strength here. So what you need is the market really to show you some sign of I don't want to go up anymore, but some kind of reversal pattern well, this, for example, I mean, this is a 50-minute time frame, right? So what you see here is the market obviously seeing a bearish divergence forming. So the market is pushing higher on a 50-minute time frame, not seeing any big reversal here, and obviously the RSI here is not making higher highs anymore, showing that the market is definitely losing some momentum. This is just an indication. Nevertheless, it's still something worth considering. So if the market now starts to top out here, showing some weakness on a 50-minute time frame with a strong red candle, reversing most of this of these gains here, probably falling below 1270 again, below this level again, back to below this level. I could imagine that going short aggressively against this level is probably not such a bad idea here, and it could get really interesting for us to probably short the market against this level. And nevertheless, the problem is I just can't formulate a trading setup right now since we do not have such a reversal pattern yet. But I say the market looks hugely extended on the upside, and even if we don't go aggressively down, I could imagine the market at least to fall back towards 112, 112.20 here, meaning from the current levels, we were talking about 60 pips. This is the hourly chart. So if you plan to trade such an aggressive reversal here, what you could also do is you could formulate a trading setup, and based on the, one second, do we have it here? Yeah, based on the ATR, you could then the stop level here. So what you see is that as you can see here, the current ATR is lying around 15 pips, meaning if you work with a stop of 45 pips on the upside, and going now aggressively short here, you could easily earn the risk when this level is reached again, and then put the stop to break even. The only problem you have here is, and this is something you definitely have to remember, the only problem you will face is you just do not know what will happen the moment the market really pushes above 113. This is a difficult spot, since it could easily be it's the yearly highs. It's the high from the Trump election here. It's a round number. The market could easily push another 50 pips. You get stopped out nearly around the highs, and then the market reverses from there. This is one of the reasons why you just want to wait until the market really shows that it wants to top out, and has no really further potential to move higher here. But all in all, I think it's definitely worth a look here, also for the upcoming hours. And also, if the equity markets do not show us so much great setups, that probably Euro USD has seen too much of a move up here. On the other hand, the moment we break above this level, well, and it's a significant break, and the market does not reverse, and I'm completely mistaken here, well, the market has at least potential up to 114, if not here higher to 116, which would come as a big surprise if you consider the fact that at the beginning of the year we were talking about a parity here for the Euro USD. Yes. So this is a great question. Thanks for asking here. So this is it on Euro USD. Now let's have a look at another currency pair, which I'm still closely watching. I was stopped out with a profit, yes, and that, as you may have seen here, it's not the worst. But Euro Canadian dollar is still on my watch list, since I could imagine here, and that's one of the reasons. That's also something I told the German audience. The thing is, I somehow hope that Euro Canadian dollar will push as high as 150 here. So if we move up to 150, I could imagine going aggressively Euro Canadian dollar short against this level again, putting a stop here above the highs, and then trying to ride another wave down towards the region 146. This is the other setup on the Euro Canadian dollar. So wait 1 second. I'll do the following. Let's do the following. I'm working here the editor in this case, and I'm just writing this down. So Euro USD short idea, aggressive and anti-cyclical. So the entry short, well, probably somewhere around 113 to 130.30. That's probably probably a good level. We'll do this on the hourly chart. So the stop is somewhere, I'd say somewhere between 113.50 to 113.80. In this case, I'm talking about 3 times ATR, 14 ATR, 14 ATR hourly, 1 hour here. So as you may recall, that was around 15. So this is somewhere where you put your stop. And then the target, and let's put it that way here, without take profit. So by the way, I'd be willing to hold on such a position for quite a while. So probably also into the next week, to be honest. So I could imagine that there's some speculation coming up that the Fed probably will definitely hike rates in December, not in September, but in December, a third time in 2017. Probably based on very good numbers around the NFPs or something. So that's the last week and this week, the economic calendar wasn't really packed with news events. Even though we've seen bigger moves today, thanks to some comments from respectively Mario Draghi and to come Janet Yellen, who will probably give us some more volatility. And nevertheless, so next week could get us some bigger moves in US dollar, probably start or it could be the start of a bigger correction here, while we have to clear this level around 97.50. So you may be wondering, Euro USD short, why I'm Euro USD short when I see US dollar being so weak and Euro so strong. That's why I talk about aggressive and anti-cyclical. So I'm aware of the fact that US dollar is weak right now, and I'm aware of the fact that Euro is strong. Still, I just don't buy the Euro strength right now. So I just do not buy this. Since things haven't changed that much, and I'm definitely willing, especially from a risk-reward perspective. And if you look at the fact, in the case of Euro USD, for example, that the market has already risen significantly, I'm still somehow willing here to try to give it a try here, and probably also try to anticipate a breakdown toward below 111.20 and a push as low as 110.20. That's the region here. So target without take profit, first target is lying, and that was something I mentioned already on the hourly chart, 112.20. So remember this, I was here, these highs, but I'm not working with take profit here, but this is that's just a level I look at to make sure that I have a good chance to, from such an entry, aggressive entry here on the upside, to have a chance to move my stop to break even. So that's what I'm looking for here. And this is also something why I work without a take profit here. But the overall target is lying somewhere around 109.10. So this is the target I'm looking for. And I can't underline it here, but I'll mark it that way. So this is what the target I look for. Here I have to add the risk, which is 50 pips. And there you can see the chance. If we enter at 13, then the chance here is 300 pips. If we're entering 13.30, it's 330 pips. So let's work with 300 pips chance, or reward in this case, reward 300 pips. And then you can already see that the risk reward is really attractive. So based on what I expect, it's not sad that the market will do exactly that. I mean, it would be awesome if it does, but the risk reward then is 1 to 3. So this is the first setup with some clear numbers here. And yeah, whereas I say let's just see what happens here. So let's carefully watch. Probably I'm just shorting the market in a few minutes if we get to see such a squeeze here on the upside. That it's definitely possible. One second, I have to just look up something here. One second. Okay. Yeah. So just let's see. So probably I'm shorting. I already have to see how much risk I'm willing to take. So this is something I had just to calculate here to be fast enough then. So meaning, one second, I do this following here, just in case. So it's I just hope don't get this wrong here, so that I'm planning to go aggressively short now or something. No, but I just want to be prepared, just in case the market pushes now aggressively above this level, and this probably extending this, let's call it crazy move to some extent here, extended above a certain point, and then I'm willing to go aggressively short here. So that's then the purely discretionary approach here from my end. So I did the research already. I have a clear plan, what I plan to do, and it fits my trading style. It fits the way I trade the market, even though I have to probably enter the market in a very discretionary manner here. And so what I just calculated was, if I'm working with a stop of in this case, then here, if I'm working with a stop of 50 pips, you can already enter this, all this here, what we just calculated. If I then now enter the button, you're selling 5 lots here with a stop of 50 pips, and then having take profit of 300. This is great about this tool. So if you're planning to trade with JFD brokers, just shoot me a mail regarding more informations here. This is an add-on called Mini Terminal, and you can use this with the MT4 Plus, which was invented by, where this is the upgrade to the usual MetaTrader 4, and giving you some great opportunities here to enter the market in a very fast way, but also in a very sophisticated way. So here you have several order types. For example, you can work with you can say I'm working with fixed lot size, or I'm working percentage of equity or the balance and everything. So it's a really great tool here, and making things much easier. If you have some trouble with the MetaTrader 4 sometimes, the Mini Terminal here in the MT4 Plus environment from JFD Brokers is just awesome. It's just really it's really professional. So now this is already something which is prepared now. Let's just see how things are going. Now let's look at Euro Canadian dollar. So the good thing about Euro Canadian dollar is that you could you can see what's happening here in the euro, still what's going on. So what happened? First of all, that was also a very discretionary entry. You may remember this. That was on the 8th of June. That was the day of the ECB, when the market just topped out here. And I had the feeling that now it's over. So the euro didn't really push higher from there, but stabilized on a very high level. And that was when I sold the market short at 151, 51, 52, something like this. So that was around here, this level. No, I'm sorry. Here, that the squeeze, I wasn't short there. So that was before the day, and then here, that was somewhere here when I shorted the Euro Canadian dollar, and it immediately ran in my direction also on Friday, and then on Monday it really collapsed, thanks to the comments from Ms. Wilkins, the potential successor of Mr. Paulos here as the BOC president, the upcoming. And so the market moved in my direction. As you have seen here, the market reversed. That was on the 14th of June. That had mainly to do with the volatility also in crude oil. But the market reversed this move, moved lower. First, after we made new lows here, I put my stop at this level, and then the market reversed again, never hitting really the stop. not even coming close to this, and then moving lower here again. That was on the 19th of June. And that was, you already remember this. Last time we had the live trading together here, that was here. That was here. And I had my stop already moved to 40, 48, 50, 48, 47, I think, somewhere there. And so then the market didn't really push lower here, but in fact just turned around. That was somehow a little bad, since, as you have seen here, retail sales came in really strong last week, and that was one of those things when I said, well, I just hope that I'm not getting stopped out before retail sales, since I expect them to come in better than expected, and this could lead to a further sell-off here and pushing me towards the region of my take profit, somewhere lying around 46. So unfortunately, I was stopped out before, and in fact, retail sales come in better. And then on Friday, last Friday, we had the inflation data here, and I had already everything prepared as I have it here right now. So I was about to say, well, you know what? I plan to short a break of the region around 47.30 if inflation data comes in above expectations. One of the main reasons, by the way, for this weakness here in the Canadian dollar hasn't been the Canadian dollar weakness itself, but it was based to this drop in oil prices here. So it was mainly due to this collapse in oil prices, which somehow made my Euro Canadian dollar trade lose its momentum on the downside. But nevertheless, even if I was still positioned, there was no break here last Friday on the downside, but inflation numbers came in above expectation, and so it's not bad at all. Let's call it that way. So I was stopped out way before. Everything was fine. The payoff of the trade was 3-1. Was highly profitable. So the initial risk was something around 0.7%, I think, and the payoff lied above 2%. So I made 2% on my on the account I'm trading, more than 2% than that, and this is completely fine. But still, I'm still watching Euro Canadian dollar carefully. And the reason for this is, since things didn't change that much. I mean, we're still long Euro. I still don't buy this. Here, another thing. And Canadian dollar is still heavily short. So if you look at the commitment traders report, market participants are still, even if they started to reduce their short exposure, they're still heavily Canadian dollar short. So if you combine those two, then I have to say, well, things didn't change that much. So the situation is similar. It's nearly the same here. And so what I now want to see, and what I look for, is the following. I hope that we make it back towards 149. Hopefully 150, 149.60 to 150. So this is the level I definitely watch. So Euro Canadian short. So Euro Canadian short. This is also on the hourly chart, even though we can also see this on the daily chart. So this region is quite significant here, and so the idea behind this is we have a region against which we could short the Euro Canadian dollar. It's 149.60, 150, and then having a stop placed here above the highs, which is 52.60. That was, by the way, the initial stop level of my trade, of my short trade, which was closed here at 40, 48, 48, 47, I think. So the stop here, that is lying then at 2.60. So the risk of the trade is max 300 pips. So as you can see here, obviously, this is great if you're having a broker who offers some micro lots. You can reduce the position size. Else it would be really difficult here to find a to have a risk of 300 pips. And then the target it lies still around 45, 50, 46. So the reward is min, let's see, 360. Yeah. So that's probably something where you say, wow, this is really aggressive, right? So it's a little bit better than 1-to-1 here, even though I have to say I'm not necessarily working with a take profit here in this region. So what I plan to do is to say, well, this is the Macron gap. You may remember this. That's also something which is relevant here for the DAX, for example. So if we break below 12,500 points, then it's highly likely that the market will close this gap here. And so I'm using this as kind of orientation on the downside here, even though I'm not necessarily saying that I'm working with take profit here. But what I could imagine is to let just profits run in case the market really starts to build kind of trending structure. So look at how, well, that's probably not such a great example here, but look at this. So how long trends can last in such cross pairs, and this is not just on the downside but also on the upside. And now the thing is, and this is probably something worth remembering, I already told you that there's a very interesting development in crude oil and in WTI. So by the way, let's have a look here at the euro. What's happening? So we pushed already above this level, right? 113, 113.05. Still, I'm not aggressively shorting in this level, even though we should carefully watch what's happening now. But WTI entered a bear market here with this move, and we know that WTI is also positively correlated to the Canadian dollar, meaning this is interesting, since many might say now, well, okay, then probably being Canadian dollar long is not such a great idea. But and this is the great thing about this. There were several times when WTI entered a bear market, so losing from the highs here of the year to the lows more than 25%, equal or more than 25%. And from this day on, WTI was on a year-to-date base up 18%. So 12 months from this moment on. So meaning that chances are somehow there that WTI probably has seen a bottom here now, and is now, even if it doesn't necessarily mean that we now shoot through the roof and see a huge spike in oil prices, but that probably we're going higher from here and probably pushing back towards 50, probably stabilizing here, seeing bigger moves, bigger volatility, but all in all, seeing crude oil prices rising from here. And if crude oil rises from here and the Canadian dollar can profit from this, I think there's a good chance that your Canadian dollar could develop such a trading structure. So even though it looks at the first glance here, at first glance, it doesn't look so promising. The risk reward is slightly above 1-to-1. It's still, I think it's still attractive enough to give it a try here. And yeah, short your Canadian dollar against this region around 150. So probably it's definitely worth it. And yeah, so that's the second scenario I'd like to draw here for your Canadian position short. Both. So this scenario here, it's more short term, but still, it's not an intraday trading setup. Same thing here for Euro Canadian dollar short. It's a long term idea. Probably, I don't know, months. Probably we're waiting here for where we're trading this setup here for several weeks, up to a month or 2 months or something like this. So it's definitely a little more long term. And another also more short term setup here is probably in dollar Japanese yen. It's now this very crucial level here. So all in all, I have to say, as already said, so if this really works out, I mean, that would be really great. If euro tops here against those highs, and by the way, this is not the worst. So you may probably now say, well, didn't we miss the trade or something? Didn't we miss the opportunity? No, not necessarily. Since this is perfect, rather sooner than later, the market has to come down. It has to. This is a 50-minute time frame. So now just imagine the market comes down a little more and then pushes again to those highs, but it's not making it above them. Then you clearly have a sign that the market is obviously topping out. And that's one of the reasons why probably the current price action is not the worst. So I mean, it could be that the market now reverses sharply. That's probably not the best thing for us, then, since then we'll have a lot of trouble to enter the market. But something here which you can see is showing you then that the market really is topping out, that there's no really more momentum on the upside, and this is probably something which is not that bad. So all we need right now is to be a little more patient anymore, and probably well, it makes also sense to wait for Janet Yellen to step up. So probably we are all expecting bigger moves to come in the evening here with Yellen speaking, but Yellen doesn't give any hints at all, and that is non-event, and the market is just not buying anything here, but then topping out around 113. Then we have to wait for another opportunity. Probably this is also a sign then that the market won't come down, but it's probably about to head higher and push significantly about 113. So this is also something you should take into account here. So now let's come back to the dollar yen. So dollar yen here, and this is the other thing. I still think that dollar yen has some upside potential, especially if there's a surprise in the rhetoric of Yellen, and that she comes out more hawkish. This means that dollar yen has definitely some room here on the upside and could push significantly above 112. Probably towards 114.50. So the region here around those highs from May, and also here we can probably draw a setup on an hourly chart, even though probably 4 hour leads, 4 hours better. I consider this region to be more significant than this one. So this is the daily lows, but I'd love to have my stop here, to be honest, at 110.90. Entering the market at 100 with new daily highs, let's say. Yeah, let's say 112.50. So I'd buy the break. Dollar yen long. The entry long is 112.05. So by the way, please don't understand those setups here as investment advices or something. This is something really important I have to notice. So you have already read it in the risk disclaimer at the beginning, but what I'd like to get you through here is, I mean, we're not necessarily talking about, so the risk disclaimer again, but we're not necessarily talking about the U.S. market opening, but we're in this case talking about how to trade the market opening. And there, as you can see here, it's always the same structure. I formulate a clear entry signal. I first of all, I do the research. I look what do we see right now here in the market and everything, and do my research. I try to see where is the advantage, where is probably the most pain lying, meaning where do market participants get hurt the most once a certain level is triggered, or once a certain rhetoric is used from a central banker. And then based on this, you formulate a trading setup, in this case saying, okay, I'm buying the break here on the upside, entry long. Where do I place my stop? Then where's my target? What's the risk reward? So that you get an algorithm of what you're doing all the time, every time. And this is especially important since many market participants, retail traders, they don't think, but they first act and then they start to think. And this is a problem since for example, that's the same thing I did here. So I clearly defined my entry level. So what do I want to see, and where is a potential entry level? Where do I place my stop? What does this mean in terms of my risk in pips here? And based on this, I then formulate how much am I willing to take, how much risk am I willing to take here? Let's say something between 0.6 the risk in pips. I can then calculate my position size. It's too often the case that many people just jump in the market with whatever trading size, and then they say, oh wait, damn, I just sold, let's say, 1 million euro USD short. Okay, that's not good. What am I willing to risk? Okay, I'm willing to risk, let's say, 1%. In case of a 300 grand trading account, we're talking about 3,000 euros. Okay, So the pip value is something around 90 euros, meaning I have a risk then of 30 pips, probably 35 pips. And then you place the stop level 35 pips away from the current market level and just say, okay, this is my stop. But it's just a stop, which is based on the amount you're willing to lose, but it has no significance. It's just a stop somewhere. So it's in somewhere nowhere, if you want the stop. So it doesn't mean if this stop is triggered that your setup is not valid anymore. And this is something you have to reverse here. So before jumping in the market, you have to say, okay, when is my current market view not given anymore? In this case, for EURUSD short, I mean, this is difficult since we're here working with an aggressive anti-cyclical short. So working here with a 3-time ATR stop, this is not necessarily sad that the market moves another, let's say 50 pips on the upside, that then the mode is not given anymore, since it's even more extended. Then I probably from there you can short. This is the problem with anti-cyclical setups. But what I want to give you here is I would just want to give you a clear algorithm, a clear idea of what you should go through when formulating trading setup, and then set up a trade. And this is exactly why I do this, and why you shouldn't understand this as investment advice, but in this case as an idea of how to get a routine in your daily trading. So the risk for such a setup here is then 115 pips. The target is obviously, in fact, obviously 114.50. The reward is 245, right? Yes. So the risk reward obviously better 1 to 2. Risk reward 1, 2, 2. And so yeah, that's another setup we could formulate here. Even though I have to say the risk reward is probably even better, since I usually plan to take out half the position once the market falls below the daily lows from today. So if it falls below 111.50, once we were triggered here on the long side, the market then shows that it's a fake out and then reverses, I take out half of the position at 111.50. So meaning that the average risk here is not 115 pips, but lesser than 100, or less than 100. I'm sorry. Yeah, so that's it on the dollar yen. Obviously, Euro Canadian dollar and Euro USD are probably more interesting to me right now, since I spoke in way more detail about these markets here. And there's also and then a question around Euro GBP. So we can also have a look at this here. But I'd like to add something here. So I won't formulate any trading setup here, because I don't have such a positive outlook for the euro. I don't like the euro right now. I think it's hugely extended on the upside. So I'm more short euro here, even though I don't like GBP too. So all the uncertainties around the political, or from the political landscape right now, Brexit negotiations, Theresa May losing the election she called in April, all this combined is right now leaving me very skeptical about the pound sterling too. So that's one of the reasons why I don't necessarily like to if I plan to short the euro, I don't necessarily like to short it against GBP here. Even though we have to say it's also hugely extended here on the upside, and even though there's also some room on the downside. But what I usually look for is currencies which are weak, or which are likely to be weak if they then are, when they are sold, that they are sold heavily. In this case, euro is such a candidate here. And on the other hand, I'd like to buy currencies which are having a chance of outperforming then, or showing some strength. So selling the weakest and buying the strongest. And in case of Euro GBP, I have probably euro on the weak have necessarily GBP on the strong side, and that's one of the reasons why I don't like to short Euro GBP. Even though it's also a very interesting region where you should start and probably think about aggressive anti-cyclical short engagements, if the market doesn't move sustainable here through those former highs. I mean, what we have to understand is, so far, obviously, market is strong. So everything here which is short is anti-cyclical, and something which is probably to be avoided. But as I already said, I just have trouble with being long euro here. So at these levels, at these elevated levels, I don't want to be long euro anymore. But it's more like I'd like to fade this move here on the upside and be short euro. So it's 4 minutes left. Let's do the following. Let's have a look here at the market opening so far. What happened in the US markets? Did something big happen? Oh yes. So far we have a trading range of a tremendous 4 points. That's crazy. Okay, sorry. So we've broken the lows from yesterday, obviously. So right now, what we could do, based on the fact that we are quite elevated here too, that the market is probably at a level, in this case, the S&P, where we probably should start think about aggressive shorts, rather sooner or later there could be some volatility hitting the market and then pushing us lower. That probably it's worth to give it a try to short the S&P here, if there will be a not backdrop, but a move higher towards the spot open. This is the turquoise line, respectively the green line, the lows from yesterday. So potential area for short engagements is lying somewhere between 2,433, 2,434 points. So here, this is a potential short area, and yeah, stop level is a little more difficult since. Let's see what the ATR does, but usually I'd say I'd probably work with a stop of 4 points here, from here. So putting the stop at 2,437, so somewhere here, that's where the stop lies. It's a coincidence that this is a relative high here, even though that's the trading hours here overnight where we don't have any volume, so there's no significance to this level. So I'd use a stop here of the ATR, which is or based on the ATR, and where I put a multiplier in front of this and then say, okay, let's work with a stop of 4 points here. I think this should get the job done. And from there, I then aim to at least get to see another attack at those lows here, respectively a break of these lows, and then hopefully being capable of moving my stop to break even. Yeah, so that's it. 1 second, I have to see. Okay, yeah. Yeah, so that's it from my end. I just hope you enjoyed it. I was, to be honest, I was a little skeptical. If I can present something great, something spectacular to you, where you can say, well, this is something I can get something out of for my trading. Because volatility, as already said, is very low in the U.S. markets right now, so it's horrible to trade equities in general. But thanks to those comments from Mario Draghi, we definitely see some great moves in the currency market so far, and I just hope that you can take something with you for your trading. As already said, just test this probably. Just use these setups here and test them in a demo environment. Just test them and see whether they work out or not. If you want, you can also write me a mail, and then we can discuss these setups here in those webinars. Just if you're interested, just shoot them over, and we can easily look up whether they worked out, and how, if they worked out, how you could manage them if they are still in play. Just imagine the Euro Canadian dollar, for example, is a long-term setup, which could get really interesting here, and definitely probably bring some positive input for your trading. Yeah, so that's it from my end. I just hope you enjoyed the webinar. It was a pleasure. It was really a pleasure. I much appreciated the time here and the chance of being here. And so that's it from my end. So talk to you again then next week. I look forward to it. Have a nice week. Happy trading. Watch your stops, and see you at probably in tomorrow's morning meeting at 9:30 a.m. GMT for JFD brokers. And yeah, so that's it from my end. Have a nice day. See you, and bye-bye.